Hey everybody. Oh, let me fix the camera. This thing looks terrible. Hold on one second. That's better. Hi everybody. Welcome to the usually Thursday evening, daytime, morning financial thing stream. Yes, I am back. Pinch yourself because it's true. I had to pinch myself also. It's been a while. Apologies for the not being here recently over the last few weeks, but obviously sometimes things come up in life. But anyways, thank you for being here. Really appreciate that. You can see, I think, can you see Holly? Is she there? Yeah, she's in the background here, of course, too. It's nice to see everybody. I'm really, really glad to be back and hope to be here, of course, on a regular basis. Thank you for showing your support over this difficult time. For anybody that didn't know, I was tending to a family issue. My mother unfortunately had a stroke at the end of September, and I just kind of dropped everything, hopped on a plane, went over to see how she was doing and how I could be of assistance, and just kind of wanted to stay and be there for her. Just a quick update that she's actually 87 years old, so she's quite the trooper. Strong, stubborn English lady. Of course, feels like she thinks like she's 16, 17 years old, she feels like she's invincible, but obviously, as we know, that's not always the case. But currently she's still in the hospital, unfortunately, and we're just trying to get her rehabbed and see where it goes from there. But I've definitely learned a lot about caring for somebody, caring for an elderly person. I've learned a lot about the financial aspects of what happens to an elderly person if they're unable to return to their home, which I think is worth a mention too. It's kind of something I didn't really plan thinking about for the future, so I learned a ton about that. But it was kind of touch and go at the beginning. Honestly, the first few days, I definitely didn't think she was going to make it, but she was a trooper and kind of pushed through. And the NHS, through all its downfalls, the people over there have been really, 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 really good and have taken really good care of her and have been very kind to myself and the other people that were caring for my mother. So big ups to the NHS for helping just so she would survive and be there and be there, hopefully continued forward. But anyway, just moving forward, so next Thursday on the 9th, the plan is to have Narinda here from Cufflink. By the way, Cufflink, still the sponsor of the Financial Thing Livestream, where they are still offering up to 9.83% gross interest per annum, well over £250 million of property-backed UK investments made since 2016, and zero investment losses to date for investors. Capital is at risk. Please don't invest unless you're prepared to lose money. This rate can change. Also, the interest rates changes all the time, but that is the current rate. You can sign up at the link below if you don't have an account. You want to check them out for free. Go do that. join.cufflink.com/financial-thing. But he will be here on the November the 9th. That's the plan. Narinda, of course, one of the founders of Cufflink. So we'll talk about what's going on over there. We'll talk about this increase in minimum investments, changes for the website, changes to the company with their branding going forward in 2024, and his general outlook on the peer-to-peer lending world, which some people think is contracting. I personally think that the players who are doing well are continuing to grow from strength to strength, which I think that's a good thing. Also, side note, I did when I was in the UK have a chance to run over to LoanPad's HQ, and I had to sit down with Louis over there, and we had a really good long chat about what's going on over at LoanPad, just telling me about what the company's up to, their lending partners. So I'll chat about that in a minute. But yes, if you can drop a thumbs up and the like, that would be great. Even if you don't do it for the stream, do it for my mother. Give her a thumbs up. Nice little push forward. Quick hi to everybody. Mike Powell is here in Southampton. Lionfish hunting in the windy and hot Cayman Islands. Welcome back. Thank you so much. I'm glad to be back. Thank you, Mike, for the welcome back. Paul Bagworth and rainy Kenilworth. I was hoping that Kenilworth would not be rainy for a change, but thank you for the kind words. Paul is here in Stockport. Norman from a wet and windy Sussex. Yeah, I understand I missed a storm, which the weather was actually really nice. Thank you for the welcome back to Norman. Colin Perry in Peak District. Peter Vince is here. Welcome back. How are you, your mom and Harley? Well, I am doing okay. You know, it's a little bit stressful. I'm not going to lie. Actually, a lot more stressful than I ever imagined, watching a loved one kind of going through that whole process. I have a few more gray hairs because of it. But, you know, I think when you go through things like this, you just have to keep a positive attitude, right? If everything is doom and gloom, and if you start thinking about everything in a negative way, it can really bring you down. So that was one thing I learned. You know, I was around a couple of people that were really struggling with this situation. I just really had to pay close attention to, you know, being present one day at a time, and just kind of keeping a positive attitude, and not kind of thinking about what's the worst case scenario, because it's really easy to go to that place when you see somebody who's ill, not doing well. But Holly is doing well. She was a little mad at me for leaving her for so long, but she got over it, and now she's fine. Aki Chap is here. Welcome, Aki. Dave Allett in the West Midlands. Yes, everything is okay. Annabelle is here. Nyron. Welcome, Annabelle from Spain. Alan Stratford. Thank you very much, Alan, for the welcome back. So yes, November 9th next week. Plan is to have Narinda from Cufflink here. And then hopefully, all being well, I'll be here regularly on Thursday, unless for some reason I have to jump on a plane again. It was nice to be back in the UK. I'm not going to lie. The weather was nice. Everything has gotten so much more expensive, I've noticed, even since when I was there in June. Just the inflation, cost of goods has really gone up a lot. And I did notice the general feeling was somewhat of a struggle financially for a lot of people. So that was interesting. Very much like the US, you know, tied sort of similar situations. But we're going to talk about some peer-to-peer lending stuff today. And I'm going to show you also the Trading 212 portfolio, because we did have a relatively big thing happen in the portfolio. You wouldn't know it judging by the balance on there, but I'll show you what I did. I made a couple of changes too, or one other change. So yeah, I'll show you that. And we're going to talk a little bit about the stock market and general thoughts about what's going on with interest rates, the economy. You know, this is, look, the peer-to-peer world is a pretty small niche world, and I do try to expand it out a little bit so we're not just talking about peer-to-peer, because, I don't know, we probably wouldn't have that much to talk about. But on that note, actually, our friends over at the Peer-to-Peer Finance News have rebranded themselves to be called now the Alternative Credit Investor. It's an interesting name. It's very dry. But Susie over there, I think, is doing a really great job. And the reason they did that was kind of what I just talked about, that they used to focus on peer-to-peer lending, and they've said the same thing, that the market's really gone through a period of consolidation over the last few years, meaning that they have fewer and fewer companies to report on. And they've had some investor feedback. So what they've done is sort of expanded the range of what they report on to mean not just peer-to-peer lending stuff, but other financial news topics and whatnot. Cufflink, moots. I do not even know what that word means. Moots. It's a very interesting But Narinder is talking about here that the company will go through some rebranding in 2024. I don't think that's a negative thing, but they're talking about an enhanced digital presence, which maybe is a website refresh, and then a new logo. They're expected to overhaul the brand in 2024, adding new features to the platform, greater transparency via enhanced data and information on the properties being invested in. I think that's a really good thing. As you know, one of the things I've always said about Cufflink is they're definitely not my favorite website. It's definitely improved a lot over the last year or so. I mean, I didn't like it much at all, but they've kind of made gradual improvements. I think it's better now. So I think as time goes on, they will continue to do that. It looks like in 2024 they'll have a rebranding. I don't know when in 2024. Maybe we'll find out next week when we speak to Narinder what's going on regarding that. But hopefully they're going to have some new transparency with the data, which I think is always just a really great thing. Narinder said the firm will be adding more information on its properties in response to requests from customers, and that Cufflink was exploring integrations with the readily available software to support residential valuations that have been undertaken by a qualified valuer. That's interesting. Harry, the CTO over at Cufflink many years ago, had always talked to me about having some kind of integration of evaluation from a third-party company into Cufflink to kind of just add the information that you get. So it looks like they are still continuing to look at that. And that's not an easy feat on a technical side to bring that information in. But they are working on it. Also, again, our friends at the Alternative Credit Investor have announced the peer-to-peer lending platforms of the year, and every year they have a award ceremony where all of the companies come together and awards are passed out. So this is going to be platform of the year, and you're going to see these nominations of companies that we quite often talk about on the stream. Crowd Property being one of them. Of course, Mike over there. Pretty proud of what he's doing. They have lent quite a lot in property projects, so they've been named Easy Money now, the UK's largest IFISA provider with more than 60 million invested through the tax wrapper. They have achieved a target of paying £1 million a month to investors, and you can see they have a target now that they want to be paying £2 million of interest per month to investors while maintaining a 0% default rate. Then we got Roy Warren over at Folk to Folk, who's also been nominated now with 646 plus million of business loans, upped its rate to 8.75% while maintaining a 0 loss rate for investors. So that's good. And Cufflink also being nominated. They have seen a really, really good 2022, 2023. As you know, I talk about Cufflink. I think they're doing good things over there. We got Relendex. Not really a company I know too much about. I've not really dove too much into Relendex, but they're on there. And then another one, Swedish peer-to-peer lender, SaveLend, which is the only non-UK platform to make the shortlist. They've had a pretty dynamic year. I don't really, again, know much about SaveLend. I don't tend to focus too much on the Euro peer-to-peer market, just because a lot of the readers are financial things, not really European investors, so we just focus on what we know, which is UK. I was a little disappointed that I think LoanPad should have gotten a nod there. I think they really deserved a nomination at least. Maybe they didn't throw their hat in the ring. I don't know what the reason for that is, but I think that's generally a pretty good list. Assets Capital's not on there. Imagine that. Tongue-in-cheek. So, yeah, speaking of LoanPad, just talk a little bit about my visit over there. I did get to go sit and have lunch with Louis for a couple of hours, which was very generous. He was limited on time, and he's always been very open door policy. And probably to you too as an investor too. If you are interested in finding out more about LoanPad, you want to go see them, go check them out. They're up there in the North London area. So I took a trip up there and we sat down and we talked about what they're up to. And I can tell you, I just generally got the warm and fuzzies like I generally do from Louis. He's a very genuine guy, cares a lot about, again, this is my opinion. This is not a plug for them. They didn't pay for me to say these things. I invest my own money through LoanPad loans. He just always gives me a very, very genuine vibe that he really does care about investors' money. And I get that from other peer-to-peer lending companies. I'm not saying Louis is the only one, but he is one of the guys I really feel like he does care. He wants to do good things in the peer-to-peer world. He's very much dedicated to continuing to support retail investors like yourself because he understands that you guys and me and you girls out there are the ones that really built that business from providing retail money. So he doesn't want to stray away from that. They've got a couple of additional lending partners now. The biggest ones, I wrote the other two down, but it's Hampf. And there were two other ones that he told me really making up the majority of the lending. And I'm going to update the review. I just haven't had time to do it yet. But if you come back in tomorrow or the next day, look at the LoanPad review on Financial Thing, and I'm going to update who the three most used lending partners are. But he continues to have these really great relationships with these lending partners. And what I found most impressive about their operation is just how streamlined it is. It doesn't require a lot to run LoanPad, which I think is important as a business because if you have so many employees that you have to pay, big offices, the expenses get high, that can be an issue. But LoanPad is very, very streamlined in the way that it operates. It's very tech-heavy. Everything is, with regards to kind of loans being approved, they've just got a really easy process that works for them. So being such a streamlined business, it's very, it's profitable. It means it's operating well, which is good for you. If you have money with them, you want to know that the company is doing the right things on the administrative side too, that they are going to be able to make a profit and continue to operate in a manner which they'll be able to survive through good and bad times, which LoanPad has seen to be able to do. So, yeah, it was a case of more of just steady, right? So no big changes, no talk of real new products, just kind of doing the same thing and hoping to grow, to attract new investors, to attract more money. They have plenty of demand for loans from the developer side. So obviously the big challenge of a peer-to-peer company is getting enough retail money in to be able to service the loan demand, because you can't always do that. You just don't always have enough money on the retail side. So that is why a lot of companies do look at institutional lending lines, because they want more money to lend out. But if you look at LoanPad statistics right now, you can see them on the homepage down here. 151 million in live loans, 41% average loan to value, and 0 capital losses to date. One thing Louis did say is the FCA continues to be, something that has to be respected, that they are always making sure that they're compliant. And that's always a challenge for a peer-to-peer lending company. So I was really, really impressed. I was very happy. And I wanted to run out to their Trustpilot reviews. Always put a lot of weight into these Trustpilot reviews because you don't really know who's writing them at the end of the day. But I think they're somewhat relevant. You just see they have good feedback here, 4.8 out of 5 stars, 574 total reviews. Not really any particularly bad ones. I mean, a couple of people say, oh, the interest rate's not good enough and blah, blah, blah compared to Bank of England. But, you're always going to have a couple of negatives, but generally, it's just really happy customers. And they continue to put, and if we go back, look, you can go back to 2019 when LoanPad was very new, and those reviews are good, which is it's just another positive thing to see. One thing is they are really paying attention to these interest rates. As you know, they've climbed up their interest rates quite a lot from where they used to be. If you remember, back when rates are low, we were at 3 and 4%. Now we're at 5.5 and 6.5%. And they're generally just keeping an eye on that and continuing to adjust those rates over there as they need to be adjusted. One other thing I did ask about was this £10 minimum. They are still working on the new update. Louis said it was quite close to being completed, and when that does on the update, you're not necessarily going to see much change to the front end of the website as far as the user interface, but you will see that £10 minimum going down to, did he say it was 1p? I can't remember what he said. It's very low anyways, so it's not going to be that £10 minimum anymore, which is nice because you get a little bit of better compounded interest on your money, because you're not going to have to wait until you got £10 of interest to get reinvested. I think that's the one thing that most people want to see at the moment, and just continued interest rate increases if that is necessary, and the minimum. So well done, Louis, over at LoanPad. It's good to hear that you're still moving in the right direction. As we mentioned, Crowd Property, which has been nominated for this peer-to-peer lending platform of the year, now hits £800 million in housing milestones. They've funded more than $800 million in property projects. Property lender told investors it had funded $100 million in property development projects during the last quarter of 2023, bringing the total value up to $800 million of funded projects. 462 mil of facilities have been agreed, and 359 mil has been lent to borrowers to date. Now they've funded more than 3,400 properties in the UK. So doing good things in the UK. One thing that Crowd Property is not one of my favorite websites. If I have to say one negative thing, I just don't like the back end. I don't like the user interface. I find it a little bit confusing. It really needs a redesign, but these things are not easy to do. It's not a case of just new website design, off we go. There's a lot of coding and back-end stuff involved, so I don't know if they're planning on doing that. But aside of that, they're doing what they say on the tin. I think my interest return on there has been about 7.67%, with an advertised interest return being a little bit north of 8%. So not bad. Not that much better than LoanPad, though, if you think about now. 6.5% in the premium. So this is why I think it's good to diversify and have different lending products still, because even though something can be advertised as a higher rate, you're not necessarily always going to get it. LendingWorks maintains stable returns in Q3 of 2023. I think my LendingWorks account is almost about back to nothing. They've paid back nearly everything that I had in there. It's nice to see, but they have reported stable returns, and they've lowered their expected loss rates. Overall expected annual losses now for the business are decreasing from 4.1% to 4% in the third quarter. So, they're still not operating at a profit, but I think all we care about on this, and yes, we want the LendingWorks to do well and to continue to operate as a business, but as an investor, from what we've been through with LendingWorks, we just want to get our monies returned to us. So as far as I know, I haven't heard of anybody who's had any issues being repaid from them, but their business is still continuing to operate at a loss, even though it is stabilized out. Average annual returns on past loan cohorts from 2014 to 2019 are 4.4% for growth investors and 3.8%, flexible investments. And then on the 2020 and 2021 loan cohorts for LendingWorks, the average returns are 2.5% to 4.5% for growth and 1.8 to 4% for flexible. So not really great as far as the returns have gone, but it is what it is. They're shutting their doors to retail anyway, so payback. Shojin is trying to raise £4.9 million. There is Jatin. Of course, he's been on the stream before. They're looking to attract $4.9 million in capital. This will be the group's last private fundraise, and they are planning to offer an IPO, which would be a stock market float, in 2026. What I found interesting is the Series B. What is it? Going to increase the valuation to $65.8 million, I think, is what they're looking for, and then they want to have the valuation of the company at $588 million by the time it floats in its IPO. Wow, that's a huge increase. Basically 9 times where it is now. But they are growing quite rapidly. Company has been profitable for the last 3 years, posting core earnings of about $500,000 in its latest annual results. So obviously they're doing something right, and definitely continue to see Shojin hopefully heading in a positive direction. Wish them all the best. They've been very good to the financial thing stream. Crowd Property says property developers are bullish in 2025. For the year 2025, 67%. Developers plan to maintain or increase their project plans for the upcoming year, with 86% predicting a busy 2025. Why do you care about that? Because you want to see continued loans coming into Crowd Property. I noticed in one of the comments somebody has said there is a lack of loans on Cufflink. Well, the property developers are not bullish. It means you stop seeing loans in the peer-to-peer lending platforms that you invest through. It means you don't make any returns. So it seems like Crowd Property has done studies which show 2025 is going to be busy, 2024 also busy, and they're predicting good years. Capital Rise, another peer-to-peer lending company that really focuses on London. They have hit a £300 million origination milestone. Again, you know, we're talking about the peer-to-peer lending companies, just general seems to be small right nowadays. It's not as big as it used to be, but we still see these players in the industry that are reaching these new milestones and are quietly just motoring along, attracting business, and continue to head in the right direction, which is exactly what you see and exactly what a lot of peer-to-peer company heads and founders were saying about even though the sector is contracted as far as the amount of companies out there operating, but the players that are in it continue to get stronger. This is the same for Capital Rise. They have lent a third of their origination, it's 102 mil, in the last 12 months to October 2023. They've funded developments across London and the home counties valued at $822 million. So, you know, a respectable amount. Especially, I was always a little bit skeptical about, you know, that this company just really focused on London because we saw COVID and how it took down some of the real estate values in certain big cities like London. It seems like Capital Rise has just carved out a real niche in their lending and continues to go strength to strength. This was an interesting story. I remember reading this when I was away. The Rebuilding Society have offered promotions, or we're going to offer promotions advice to Binance, the cryptocurrency platform. And I was thinking, well, Rebuilding Society is a peer-to-peer lending company, and I've tried to get the owner of Rebuilding Society to come on the stream. I've always wanted to talk to him. We just haven't really been able to put together a date. I always find Rebuilding Society very polarizing. They seem to be still continuing to hang around, but not necessarily growing their business in a way that I see other peer-to-peer companies growing. I had some relatively bad experiences back in the very early days of my investing with the Rebuilding Society and decided to exit the platform. I didn't have the warm and fuzzies about them. I've always offered over there, Daniel, to come on the stream and kind of explain to me what is going on with his business. And then I see this news story about Rebuilding Society offering promotions compliance advice to Binance, which is the world's largest crypto exchange. And I was thinking, well, what does Rebuilding Society know about crypto? First of all, I don't know the answer to that question. But it said, this is what Rebuilding Society said: we'll be reviewing and approving various financial promotions and assisting with risk oversight and transparency. This is an important first step towards the regulation of crypto assets, and we're pleased to be a part of it. But yet, the FCA has announced that it would introduce, and these went into effect in October, early October, just a few days ago, that marketing restrictions would be placed on the crypto asset sector, just as they have been on peer-to-peer. They've kind of been grouped in together. So then this story comes out that Rebuilding Society was shut down, not the whole business, but they were shut down on the reviewing and compliance side for cryptocurrency. So they were told, no, you cannot advise Binance on crypto, and they're advertising promotions. And Rebuilding Society is hoping to appeal this decision to prevent that going on. Personally, I don't think they're going to win that one. I think that's a tough one to beat. The FCA is obviously pretty against crypto asset promotions as they are with peer-to-peer. I don't know how you win that appeal, but Rebuilding Society said it had gone above and beyond the requirements to protect consumers and respect of its service to approve financial promotions for crypto assets firms. They had submitted a waiver request for an extension to allow it more time to comply with the FCA rules, which was also rejected on Tuesday. So we'll see what happens on that. This is an interesting article. Future of the IFISA in doubt, as saying, what the plan is to create a single ISA and possibly to just get rid of these IFISAs, lifetime ISAs and stuff like that, which are not very popular. Problem with the ISA, the IFISA ISAs, you can only open up one a year, which is kind of dumb. For example, in the USA, if you want to open up more than one ISA during the year, they call it IRA over here, but you could do as many as you want as long as you don't fund more than your allowance, and that's your responsibility not to do that. So you could take $5,000 and put it in 5 different companies if you want for your ISA. I don't see what the problem is, but you got this stupid rule in the UK about one IFISA ISA per year, so you could only open one peer-to-peer ISA a year, new one. And I hope they do abolish that. I think it's a ridiculous rule. I think it's confusing. I think it really stops the growth of people wanting to be able to put money into ISAs because some people don't want to put a whole $20,000 into one company in 1 year. There's significant risk to doing that and not being able to diversify into different companies. I know a lot of people that I've spoken to want to take their 20,000 ISA allowance and put it into 4 different peer-to-peer companies in 1 year, and they can't do that. And so I think the IFISA was a really good idea. I think in principle it's a great thing to be able to do, but it definitely needs to be readjusted to where I think, let people invest where they want to invest. Don't put rules on saying you can only put it in one place. On the flip side of that, if you're a peer-to-peer lending company, you're not going to be in favor of this IFISA being abolished because now you're not going to get as much money if somebody does invest because now they have the ability to diversify and not to put their entire allowance into one company. So on the flip side, these peer-to-peer lending companies are probably going to say, we don't really like this idea of abolishment, and the stocks and shares companies too. They want you diversifying out, but as an investor, this is exactly what we want. We want the streamlining of the ISA market. It's confusing. It's annoying having to keep, track of the way things are right now. So we'll see what happens. Just looking at interest rates. So as we know, Bank of England and the Fed have decided to keep interest rates where they are. So they had a 6-3 vote in England, or the Bank of England. So that means 3 people actually voted to increase interest rates, which I think is kind of ridiculous. But 6-3 vote when interest rates stay at 5.25%. That was today. Also in the U.S., the Fed, and of course, they tend to follow each other. So the U.S. Fed keeping the central bank policy rate in the 5.25% to 5.5% range. I think these rates are now here to stay. I don't think that either of these, Fed or the Bank of England, can reduce interest rates now at this point, because I think inflation will creep back into the market. We're finally getting inflation under control in the USA. It's not where they want it to be. I don't know if it'll ever get back to 2%, but in the UK, inflation still is a bit of a problem. You could just see it when you go out and buy things. But those interest rates are good if you are a saver and you want to put your money in a bank. Now you can get places like the post office 4.9% on a easy access. If you want to do a 1 year, you can get 5.9%. Gatehouse, LHV, Raise, and RCI 5.75. So for a 2 year, that's not bad. I still think I probably wouldn't do a 1 year fix personally, because there is a possibility the rates do go up again in the next rate decision. But what's very interesting is when they announced that these rates were not going to change, the stock market took a very, very big liking to this. We saw, let's have a look. We saw today things really spike up, both in the FTSE 1.22% and S&P 500. Did I get that right? I think the FTSE's in pink. No, the S&P's in pink. Sorry. Change that. See. Highest point was right up here. It was about 1.35% in the plus on the S&P, and then the FTSE, we had about a 1% and has fallen back to 0.71% of an increase. So obviously investors are liking this news. I think there's a bit of false hope. The markets have just been absolutely weird and wacky. I still get this question about investing in the FTSE 100, these index trackers versus the U.S. Well, the naysayers, the U.S. is not going to do well. If we look at year to date here, you can still see that the pink is the S&P 500. There has been just a little bit of a time where the FTSE did outperform, but it was very short-lived for just not even half a month. And then you just saw the S&P 500 again climb much better than the FTSE has done. So this is why I always just keep going back to this. I just stick to the U.S. market for index trackers, because I think over the long run, you can see the outperformance here, and it just keeps on continuing to happen. And I think it will continue to happen over the foreseeable future. Historically, it just always has. Of course, history is not a prediction of future, but I mean, this is a big difference here. Took about 2,500% increase versus a 645% increase. The numbers don't lie; they are what they are. Stock picking is a perilous. Is that right? The right word? Perilous affair. If we go to the 212 portfolio, you're going to see 17,400 £27, only 9,142 invested at the moment. The rest is sitting in cash, waiting to be deployed. Question is where? That's the tricky thing. Obviously, I have not had a very good track record with these investments as of yet. What's our worst performing right now? Cracks, Creative Realities down 35%. Green Power Motor down 30%. Norwegian Cruise Lines down 25%. Vermilion Energy down 25%. Flex Energy, natural gas 17%. This was up a much better range before. And Alibaba down 10%. So what happened? A couple of changes to the portfolio. If you're interested, you follow along with this. Our biggest holding was Calera, and right here you can see Calera was sold as a result, plus £2,163. Yeah, it was a good result. The company was bought out by an Indian company, and all the shares were liquidated automatically. They sold out at $7.25. I think we purchased in the $3 range, so that was a good result. And that share really saved this portfolio. In some ways, if that stock hadn't have done well, this portfolio wouldn't have been sitting anywhere close to this. So this is the problem with stock picking. You've got one absolute stock that smashed it, and you got all these other ones that didn't. Another company that was ejected out of the portfolio was, let me show this to you, Canadian Overseas Petroleum. That one was sold on the 9th of October. I ditched it due to various reasons of negative things that I saw going on. It was not a good deal. We lost 620 pounds of that. I think it was down 50 or 60%. So I just decided to pull the ripcord on it and get rid of it. Sometimes it's just not worth holding on to things if you don't see things in the future getting better for a certain company. But again, I am not a professional stock trader. A lot of the times just going based on information that I can read about and that I receive. And sometimes those things don't work, and you can see it here. The stock market and these companies have been having a horrible time from when I deployed this money. The portfolio and overall has done well from when I started it, but been having a very difficult time over the last year really with it, except for that Calera stock. So question is, where is this money going to get deployed? I don't know. To be honest, I don't feel very good about some of these companies on here. Deutsche Bank has kind of rebounded a little bit. That one was down 15% at one point, so that's had a bit of a bump. Green Power Motor, I don't know. I don't buy into this electric vehicle hype. UK seems to be more adoptive of electric vehicles. In the US, the range is just not there. So if you take the average range, say, of a Tesla vehicle being, I don't know, let's just say 300 miles. The problem with electric vehicles is you can't really drive it 300 miles. There's certain things that they say to keep the battery life in a healthy position. You don't want to charge it more than 80% full. You don't want to let it deplete more than 30%. So that gives you only 50% range on the battery. And then also on top of that, you get a 10% depletion in the actual total range because the battery life over the years starts to detract like that. So then you're only talking out of a 300-mile range on a car that you can actually realistically, to keep the batteries healthy, really only drive at half of that, 150 miles, which in the UK is not too bad because you're driving a lot smaller distances. But in the US, that really then becomes somewhat of a local around the city or town car. And I just don't see the adoption unless the ranges really increase or the prices really come down a lot, because you're still paying quite a premium to have electric. It's a great idea conceptually, but whether it's going to get this absolutely huge mass adoption remains to be seen based on battery technology and the cost to buy these actual cars. So this green power stock, I don't know, again, if that's something that I would actually feel comfortable in dumping more money in if we're already 30% down. So it becomes, again, research and confidence in where is the right places to invest money. I always go back to index trackers because they're simple, easy to use, decision making taken out. But this portfolio was never designed to be an index tracking holding portfolio. That was not the reason I created it. So I don't want to put the money into an index tracker. It was always just to try to trade and increase it, donate to Dr. Paula's Worldwide Healing Hands and Forest Home, give something back, but which I've been able to do. I just haven't done it in the way that I've wanted to. So we'll continue to just keep firing away at this. And a positive note, our friend over at Bitcoin is performing well, topping over 35,000 for everybody who said Bitcoin was dead. Yeah, Bitcoin's not dead. It's come all the way back from 16,000, so 100%. It's doubled. I know a lot of people were very scared and thought when that crashed down that it was never going to make its value back again, which Bitcoin again proves over and over and over again its resilience of being able to come back from these monumental tops and bottoms. So down here at 16,000, back up to 35. I continue to still say that Bitcoin will continue to move forward. It's going to get its knockbacks always. It will, but its resilience is still there. So I've been continuing to hold it and continuing to accumulate in small amounts every month, just to ride out the ups and downs. But yeah, we'll see what happens. Could completely be wrong about it. It may crash to absolutely nothing in one day, but who knows? These are the risks we take in life. So, let's see if you have any good comments. And then we'll let you go have your dinner. Hopefully some good dinner tonight. Maybe a roast, some fish and chips. One thing I love about being back in England is curry. It's being able to eat good curry. In America, they don't have good curry. But I got to go to Brick Lane and eat. I would say it was the second best curry I had in London. There's a place called Preem. Pretty good. And I actually found some fish and chips from my own hometown in Grimsby in London. That was cool. So, what was it called? Thornton's? Something like that. I think it was Thornton's. Anyway. Can we address assets capital? Still a big worry to me. Yeah, I mean, what are you going to do, right? Assets is just not really doing anything, it seems like to me. Frustrating. I've reached out a couple of times to them saying, hey, could you put a representative on the stream? Come talk to me, Stuart Law. But it's always the same. When things are not going right, people don't want to put themselves in front of the audience to explain anything. But I'll continue to try. You know, it is what it is. I know a lot of the loans in my portfolio are just not looking good. The wind down. And they got these inflated charges like, yeah, it's crappy. Pisa, I presume the one ISA per year IFISA is to make it easier to check the 20,000 limit isn't broken. I mean, look, if you're not responsible enough to keep a record of how much you put in here and there, then I don't know. I think we should be allowed to make those decisions ourselves. Bank of England projected that Q4 rates in the future will be 5.3, 5.1, and 4.5. Yeah, I mean, they could project that, but what I personally believe is once they start reducing those rates, especially under 4%, you're going to see that inflation come back again. I think they're wrong. No. Yes, I dumped Canadian petroleum. You were right, Mike Powell. I'm never afraid to say, I was wrong. I was wrong about Canadian petroleum. People are realizing the battery cars are not that great. Great for local, but the cost of recharging is more expensive than diesel or petrol. Yeah, and my friend pays £11 on one of those superchargers for his electric car. But when you factor in charging it at home, cost of electricity has definitely gone up a lot. So I think people bought into the tech, the wow factor of the shiny new object, kind of like when new iPhones come out, right? They're super expensive. And, for me personally, right, when a new iPhone comes out, I always feel like, I want to get the iPhone. So the advertising is so good. This idea that your phone is somehow going to be so much better than your older phone from a year to 2 years ago, which is never the case. They're always small incremental improvements. And I think a lot of the tech in, cars, electric cars, was sold to people as being this amazing thing, and everybody likes these big little touchpad screens, and they look cool inside. But it kind of wears off after a while. So when you buy a car and you've had it for a year, just doesn't give you the same feeling. And then you realize how expensive it is. And apparently the repairs on electric cars are substantial and are much worse than regular petrol cars. So, I don't know. We'll see. Dave Dawson, you're here for the end. You'll have to do catch up. Yeah. Nice to see you. Lots of cash being returned from unbolted this last week. Any thoughts? Gosh, that comment is huge on the screen. Hang on. I have to adjust it now. There we go. Let me have a look, Chris. To be honest, I've not logged into my unbolted count in a few weeks. Let's have a look and see what's going on in there. I mean, usually when money's getting returned, it's just a purely supply of loans being redeemed. I mean, my cash balance is negligible. So there's not really a lot of cash sitting in the account waiting to be invested. Few loans in October that were sent out. I mean, it seems like that loan flow is still good. So, no, I don't know. I don't know why. Doesn't look unusual. Yes, I will keep trying for assets capital. AccuChap likes hybrids. I think, hybrids are absolutely the best. 18% of invested cash return this week. Yeah, maybe just like Dave says, More new investors. Not enough loans. There's one big borrower who is in trouble, which has reduced the cycle of renewals. Do you know who that borrower is, Mike? Let's see. I know they're still dealing with that lawsuit too. Sorry for the coughing. I don't know what it was when I came back from the plane journey from Gatwick. I always seem to manage to pick something up. See what that overdue loans situation looks like. That's weird. Oh, here we go. The website is slow today. Give me the overdues. Borrower on a loan has started legal proceedings against... No, that was from 2018. So, yeah. Now, I'll have to look into it this week. Maybe next week when I come on, I'll have more information about it. Too much to go through. All right. I think that is going to do it. Come back next week. I believe as today stands, we will have Narinder from Cufflinks. So bring your questions. Come tune in. Let's see what they're up to. A good supporter of the stream, so appreciate you being here to watch that. Thank you for being here this evening. It's great to be back. And I will see you next Thursday from myself and Holly, who she's down there in the back. You can't really see. Yeah, we bid you a good evening. Have a great weekend. Be healthy. Enjoy the weekend. And I'll see you soon. Take care. Thanks again. Bye.